Obviously, one can have a discussion about defining stagflation, but I think the themes are very clear, which is that inflation worldwide, and notably in the States and the UK, and to some extent Europe, inflation remains very elevated and a multiple of central bank targets. And at the same time, wherever you look, the growth numbers are starting to decelerate. And we've seen clear data over the last couple of weeks out of China, out of Europe, although that comes with a couple of caveats. But I think more worrying, initial data showing a slowdown in the States. And after that negative GDP number that we had for the first quarter, and admittedly there was some special factors in there. But for the second quarter, if you look at the Atlanta Fed model, it's showing that annualized growth for the second quarter probably comes out at about 1.8%. So the risk of the global economy going into recession obviously is still an outside risk. But, that risk factor, when we were having this discussion 3 or 4 months ago, that risk factor was probably sort of 10 to 15%. I would argue it's probably now risen to close to 30%, taking a 1 to 2 year time horizon. So, if you call that stagflation, yes, we have it.
It's interesting you call it an outside chance at this point, Bob. Within the last 24 hours, Christine Lagarde at the ECB has also finally capitulated and said that interest rate hikes are coming. So that's pretty much all the major central banks, barring Japan, who feel it's now important to embark on further policy rate hikes from here on in. In what universe do central banks ever manage a soft landing?
Obviously, managing a soft landing is extraordinarily difficult. Actually, the one exception, which you didn't touch on, which is obviously People's Bank of China continues to ease monetary policy. And we've got a very interesting policy mix here. Now, clearly, central banks in the short term, and I define the short term as the next 3 to 4 months, I think have to continue increasing interest rates. And Christine Lagarde was very clear, which is that their asset purchase program at the ECB ends in the near future. Interest rates probably go up for the first time in July. A central case forecast would be that the ECB deposit rate goes from minus 50 basis points to probably plus 25 basis points by the end of the year. And simultaneously, we're talking about a Fed funds rate at the end of the year, around 2.25% to 2.5%. The challenge for the central banks, obviously, is that if you are a central banker, you cannot control supply side shocks to inflation, such as the rise in commodity markets. What you can do is try and rein in inflationary expectations. And that's what's going on now. And an interesting discussion is the mix between monetary policy and fiscal policy. And arguably, monetary policy in the current environment is very challenged. And that's against the background of rising commodity prices. And consequently, I think the onus now has to be on an easing fiscal policy to try and reduce recession risk, as we discussed.